My next guest isn't so sure about what this means for the bull market. He says February's mixed action and sector rotations kind of give us a glimpse of what to expect for the rest of the year. Let's bring in David Katz. He's the CIO at Matrix Asset Advisors. David, people don't want to hear that.
They might not want to hear it, but it likely what happened in February is going to happen a lot of months this year. We think it's going to be a pretty volatile year, both upside and downside.
Okay, so, you could say, well, then options are more valuable. Volatility creates a lot of opportunities up and down. But more broadly, what do you think is going on here? We're just churning along until we get clarity, or what?
Well, there are a number of good things that are going on right now. The economy is doing well. Corporations are doing well. We do have significant concerns about a number of the administration's policies, one toward tariffs, two towards immigration and their relationship with the Fed. At the moment, the market has ignored a lot of that. We think at some point the market wakes up and all of a sudden you'll see a 3 to 5% correction. We think ultimately the economy is going to get through all of that. So we would be prepared to buy into the dips. And when the market rallies, we wouldn't chase those rallies. The other thing to look at when you're looking at this market is expect rotations. Last year's leaders have slowed down a lot. A lot of things that did not do as well last year have really started to pick up in a meaningful way. We do think that's going to continue.
Some of the people listening might not say there's much of a difference between, okay, buy the dips, but don't chase the rallies. In other words, tell me what's on your list and what names you think are the right names to own in this environment, which maybe can protect you to the downside, but still give you that upside exposure if the market, as it has time and again, proves the naysayers incorrect.
Perfect lead-in question. So the stocks that we're talking about today are things that have already had pretty significant corrections. So really, regardless of what the market does, we think they do well. That would be PayPal, Zimmer, Microsoft, and U.S. Bancorp are all really good businesses. Most of them are selling at under 13 or 14 times earnings, good outlook. Microsoft is the one that's a little bit richer priced. It's selling at 26 times next year's earnings. We think that technology, mega cap technology, is going to slow this year, but Microsoft has sold off so much that we think it's poised to finally start to do better again. They're a really disciplined company, very good long-term outlook. 26 times next year's earnings we think is pretty reasonable.